All right, let's get right into it. We are cracking open the latest Barron's Roundtable to figure out what some of Wall Street's absolute sharpest minds are betting on for 2026. So let's dive in.
You want to know what Wall Street is buying in 2026? I mean, that's the big question, right? Where are the pros actually putting their money? Well, we're about to find out. We're going straight to the source to see the top stock picks from this incredible panel of experts.
Okay, so these are the people we're talking about, the masters of the investment game. And for the next few minutes, we're going to borrow their insights. See, every year, Barron's gets these top investors in a room to debate the market and, more importantly, to share their absolute highest conviction ideas. So the big question is, what are they seeing for 2026?
But wait, before we jump into the specific stocks, we kind of need to get inside their heads a little bit. What's the big picture here? What's the strategy? What's the philosophy that's actually guiding their choices? And you know what? The core idea is actually beautifully simple. These guys aren't chasing the latest hype. Nope. They are on the hunt for really great companies that the market has, for whatever reason, temporarily overlooked or unfairly punished. It's all about finding those hidden gems before everyone else piles in. So really, their whole strategy, it boils down to one simple word: value. Okay, so now that we know the goal, let's set the stage. Because, no investment decision ever happens in a vacuum. We've got to understand the major economic forces that these experts are trying to navigate right now. And, well, it's a complicated picture out there. You've got the Fed getting political pressure to cut interest rates, but then you have this sticky inflation that just won't go away, which makes cutting rates really, really difficult. In fact, some top economists are saying, hey, rate cuts might be completely off the table for 2026. And in an environment that tricky, you can't just bet on the whole market going up. No way. Picking the right individual companies becomes absolutely critical. And of course, there is one topic that is just impossible to escape. It's dominated everything for the last few years. You guessed it, AI, artificial intelligence. But here's the interesting part. The panel sees it as a real two-sided coin. It's an opportunity, but it could also be a trap.
Yeah, one of the panelists, Henry Ellenbogen, he just puts it perfectly. He says the AI CapEx cycle has been the engine of the market. Now, CapEx cycle is just a fancy way of saying all the massive spending on new tech and equipment. And it's true. Companies building AI and companies using AI to get more efficient, they're being handsomely rewarded by the market. But there's another side to this story. So here are the two sides of that AI coin. On one hand, you have the massive stock opportunity. Think companies like NVIDIA making the chips, or other businesses using AI to seriously boost their profits. But on the other hand, there's a pretty big warning, specifically for bond investors. See, the tech giants, the hyperscalers like Amazon and Meta, they're taking on just mounds of debt to fund this crazy AI arms race. The panel's message here is clear. Bond investors need to be super careful about what they're calling a coming barrage of AI bonds. Okay, let's get to it. This is the main event, what you've been waiting for. What are the actual companies these investors are buying right now? To make it all a little easier to digest, I've grouped their top picks into 3 key themes. Let's get into the first one. So theme number 1 is all about brands you actually know. I mean, we're not talking about some obscure tech startups here. We're talking about companies you probably interact with every single week. And that's great because it makes their business models and their potential comeback stories way easier to understand. Let's start with Nike. I mean, everybody knows Nike, right? It's a global icon. But the experts, they see it as a comeback story. The thinking is that the company got a little lazy, relied too much on its old hits. But now they've brought in a 30-year company veteran to take the helm, to really innovate and get the ship back on course. The panel, they're betting big on that turnaround. And it's not just Nike. Other names you'll definitely recognize, like Starbucks and DoorDash. They also made the list. And I think the Home Depot pick is really fascinating. Why? Because the experts see an opportunity because of the problems in the market, like high interest rates slowing down housing. They think the market is totally overreacting, punishing the stock for a short-term issue while completely ignoring its long-term strength. That's a classic value play. All right, theme number 2 is a classic investment strategy. You've probably heard the saying, during a gold rush, sell shovels. Instead of trying to guess which gold miner will strike it rich, you just sell the picks and shovels that all of them need. That's what these companies are. They're the essential, behind-the-scenes players that make our entire modern world possible.
Okay, here's a perfect example. You've definitely heard of NVIDIA, but have you heard of the company called ASML? They make these incredibly complex, one-of-a-kind machines that are absolutely necessary to manufacture the world's most advanced chips. The panel thinks its earnings are going to compound at a massive 18% over the next few years. This is the ultimate picks and shovels play for the entire tech world.
Now, here's a pick that might surprise you. Waste Management. Yep, the garbage company. Panelist Todd Alston calls it a great American company. And he argues that it's an absolutely essential service that's just not getting the respect it deserves from the market right now. It's undervalued. He's actually put a 2-year price target of $297 on it, which would be a huge jump from where it is today. Talk about an essential business hiding in plain sight. And that brings us to our final theme, contrarian bets. This one is for everybody who likes to go against the grain. It's all about finding value where literally nobody else is looking. And in some cases, it's about actively betting against the market's biggest obsessions. Let's check out panelist David Giroux's strategy to see what I mean. So he's projecting that the S&P 500 is going to return about 6.8% a year for the next 5 years. Okay, but his personal portfolio of stocks, he is aiming for more than double that return. And get this, with less risk than the overall market. So how on earth does he do it? It's simple. He goes defensive. He is not chasing the AI hype train at all. Instead, he's focused on those steady, maybe even boring sectors like utilities, healthcare, and consumer staples. And here's his key point. He notes that during the big sell-offs in all those popular AI stocks, these defensive sectors, they actually made money. It is a really powerful hedge against a potential AI bubble bursting. Okay, so let's recap. We've looked at the economic big picture, we've heard the major investment themes, and we've checked out some specific stock picks. But honestly, the most valuable lesson from this whole roundtable isn't a list of stocks to buy. It's about how to think like these experts. And this quote right here, it just gets to the absolute heart of their shared philosophy. It's not about chasing trends or getting hot tips. It is all about finding high-quality businesses that have a sustainable competitive advantage, a strong defense, and a balance sheet that's tough enough to weather pretty much any storm. And that right there is the real secret. The big takeaway here is not a shopping list. It's an entire investment philosophy. It's about understanding the principles these pros live by, looking for quality, demanding a fair price for it, and always, always thinking about the long-term strength of the business. So that really leaves us with one last big question to think about for you. Now that you've seen how the pros break down the market, how they think about risk, and what they look for in a company, what does all this mean for you? What's your investment philosophy going to be? What are the core principles that will guide your decisions? Something to think about. Thanks for tuning in.